Welcome to Multiple Perspectives, the podcast from Equity Multiple. I'm David Lofgren. Thanks for tuning in for this very first episode. Our goal here is to share candid and compelling conversations with experts in the field of commercial real estate investing. We'll be sitting down with a wide variety of guests, including sponsors, investors, academics, and members of our own team, each with their own perspectives and areas of expertise. Since the very beginning, our mission at Equity Multiple has been to make commercial real estate investing simple, accessible, and transparent for individual investors. Here on the podcast, we'll continue to do just that. We'll unpack the jargon, explore the various types of offerings on our platform, and connect you with the people involved in each stage of the process. It probably goes without saying that the world that we're living in right now, in the spring of 2020, is drastically different than the one we were living in at the end of 2019. Different in ways that none of us could have predicted. And, well, none of us have ever experienced a global health crisis like this. My guest today has an interesting perspective when it comes to managing a business through a crisis. Dustin Salzano is CFO of US Construction, a development firm specializing in luxury multifamily projects situated in the Northeast and Florida coast. Dustin co-founded US Construction in 2007, almost immediately being forced to guide his young company through the storm of the 2008 mortgage crisis and ensuing recession. This experience in navigating difficult economic conditions, along with a decade of exposure to diverse markets up and down the eastern seaboard, uniquely positions Dustin to help us understand our current situation. To date, US Construction has developed more than 800 luxury units, with hundreds more in process. Equity Multiple investors had the opportunity to invest in a luxury townhouse development in Delray Beach, Florida, from US Construction in the winter of 2019. Dustin spoke with me from his home office in Jersey City, New Jersey. Here's our conversation. Dustin Salzano, welcome.
Hey, David. Thanks so much for having me. I really appreciate it.
Absolutely, yeah. I'd like to start by hearing a little bit about how you got to US Construction. So can you talk about sort of your career journey, how you got into real estate?
Yeah, sure. It always felt like it was my purpose in life to be an entrepreneur. I was always fascinated with business. I was always in love with the idea of having my own business one day. And, simultaneously, this concept of working for some big conglomerate who more or less gave you a career path to follow seemed like somebody else was controlling my destiny. And that was just something that was never really attracted to me. This idea of being an entrepreneur was always the thing that I was passionate the most about very, very early on in life. And ultimately, it was real estate that opened up an opportunity for me to be in business for myself and to start living the life of an entrepreneur, which just really fit well with my personality and the things that motivated me in life.
Let me get this straight. You graduate from University of Arizona in 2006, right? And then how do you get from there to US Construction?
Yeah, so I'm born and raised in northern New Jersey, came from a very Italian family, very passionate people. And so being an East Coaster all my life, one of the things that I wanted to do more than anything when it was time to go to college was get as far away as possible. And so I moved out to Arizona, had a great experience there. But I knew, as much as I liked that Southwest laid back way of life and really appreciated the culture out there, I knew that I'd always make my way back to the East Coast. And so, I came back from Arizona, got a job with a big Manhattan-based Swiss bank. And I was fortunate enough to have a friend he had a background in construction. And at some point, he had approached me and said that he'd let me know that he had started a renovation business, and he was in Philadelphia doing renovations of single-family homes. This is now middle of 2007. And he was picking up some business, and there was this interesting little neighborhood in Philadelphia where there was all these rundown homes, and there was quite a few contractors that were going in and either buying the homes or working with an investor to buy the home, do some renovation, rent out the property, refinance it, pull some cash out. And he introduced me to the opportunity. and asked me if I would be interested in getting to be a part of it. And honestly, my heart jumped out of my chest because this was exactly the window that I was looking for, the excuse to get out of the big corporate world and do something on my own. And so I just jumped right into it. And so that's how, I say that real estate really gave me the opportunity to do what I was really passionate about, which was to be an entrepreneur. The things that about business that I was always so interested in was this idea of putting together deals, being in complex negotiations, and you get to do all of that in real estate. And so I was all in from the very beginning, and we got very serious and started thinking strategically on, what we could do to really turn this into a scalable business model.
Interesting. So I'm guessing that friend is John Farina.
That is John Farina, yes, still a very good friend and my current business partner.
So can you just give me a snapshot of what those early days were like when it was just the two of you, or when you guys are just starting to figure out what it's like to engage in the real estate market and try and figure out how to make your way?
Again, it started very simply because you can buy a property for X, you can renovate it for Y. It's going to be worth this when you're done renovating it, and you can rent the property for a certain amount. Our business and our strategy did not really expand above that. It was, hey, let's just focus and try and blow out these single families, these renovations. And that was the beginning stages for us. And we didn't need much aside from the two of us because we were subcontracting out all of the work. It came to fruition pretty quickly. But then at the same time, things got pretty chaotic not too long down the road, because this was the beginning of 2008, and by the middle of 2008, the entire world collapsed and really became quite a different situation and scenario for us as young business owners.
Yeah, so you start this business in 2007, and then within a year, you're facing the Great Recession. Like, what did it feel like in that moment when you realize things are going downhill right now?
Well, I think the initial moment at that stage in your career is, oh my God, I think I might have made a mistake. Why did I get into this business? Part of the value of an organization is always your ability to bring in new business. And all of a sudden, with the chaos that was taking place in the market, those inquiries stopped. But even more than that, the thing that was really scary was that the financing just completely dried up. And that was really the fuel that made our whole business model really work. And so for our perspective during that time, once you get past the, oh my God, what did I do, initial feelings, then you just have to kind of slow down and you have to stay very grounded and start thinking strategically. Okay, we have to start developing a strategy to figure out how we can do business in this down economy. And the beauty about real estate and having an existing pipeline of projects that were built up is that gave us some time, that we didn't need to make rash decisions. We didn't need to feel extremely panicked, because we did have a couple of deals that were existing that were still had months or maybe even a year for us to complete. And so we knew that was just going to naturally give us time to kind of feel this thing out and weigh the markets. And ultimately what happened was, we were patient, and eventually the financing came back. We went from having, 4 or 5 banks that we had good relationships that were funding deals, and we went down to just one simple bank that would fund our deals. And we, really for the next 3 or 4 years, we just grinded it out. We put deals together. We didn't have a lot of overhead. And so we were able to run a really lean and mean operation.
Interesting. Sounds like you end up boiling the business down to the fundamentals. I'm wondering, do you feel like there were specific decisions that you made during that down market that, looking back, you're really glad you made? Can you think of any specific instances where you think, we chose to focus on X and we can see a direct impact to that?
What we really did is we said, hey, look, we're not going to be able to make significant margins during this course of our business, because we got to make investments look attractive to an investor still. And so if that means that we're going to have to charge less for our services or not charge certain development fees or whatever the case may be, if we have to make the deals look attractive to the investors, let's do that. And let's just keep, during this time, let's focus on really perfecting our craft. And so what we did was we really focused on trying to be the best designers and builders that we could possibly be. And when we look back now, that focus is what really, when things started to turn and we got into 2012, 2013, and we saw some really explosive growth years for our firm, those decisions to focus on the craft really, really paid off. Unfortunately, there's some bad eggs within our industry, and particularly when you're talking about contractors that do, lousy work, they cut corners. That was never our strategy. We said, listen, we have to make sure that we are delivering an excellent product. And that is what's going to make sure that when we get through this, that people know our reputation as being quality builders and developers, that we do successful projects, that we complete every project that we do, and that really we deliver a high quality product. And so I'd say, that mindset more than anything, defined the vision and the type of company that we are, and has really, really created some significant brand value for us over time.
Yeah, I'm struck by the fact that you guys are positioned as, a trusted developer in the luxury condo market specifically, that like you have been able to establish your brand as one that is focused on the quality of the product. I'm wondering if when you felt like your business was ramping back up in the 2012, 2013 time frame, do you feel like there were ways that you behaved as business people or choices that you made having gone through the 2008, 2009 experience? Did it make you more cautious, or did it change the way that you look at bringing in new developments?
It was a really, really great dose of reality of how things and plans can change uncontrollably at times, very, very quickly. One of the things that we really started to focus on as we were kind of seeing markets come a little bit more back to life, and business was growing but slow and hard, like I said, really grinding it. What we then started to make our mantra is that we cannot be a one-trick pony. It's great that we went from the renovations of the single family homes, and then that eventually went into doing new construction of single family homes, to then doing small townhome communities, to larger townhome communities, and then eventually into multifamily condo mixed use buildings. So we really felt like we needed to continue to get good at developing different types of assets. That really started creeping into our minds, just like when we first started the business and we had maybe some instant gratification because, hey, we started this business, we're picking up jobs, everything's good. We remembered that things can change very, very quickly. Markets can change very, very quickly. And so we knew that we had to offer, and we needed to get good at different types of real estate assets. And then we also knew that we had to eventually start thinking outside of just our backyard, which was Philadelphia. And so that really became our mindset during those years in terms of what the strategic path forward for US Construction was going to be thereafter.
Briefly, can you just mention where you looked to develop those new markets?
Well, the first one was in Brooklyn, New York. We knew what had been, kind of overbuilt and overvalued in Brooklyn. But we did see a very, very unique opportunity there, which was to buy single family homes and convert them into little boutique 3, 4, or 5 unit condo buildings. It was a really, really interesting angle that we had. It was unique, and it's been very, very successful for us in Brooklyn. And then in the beginning of 2017 was when we got introduced to South Florida and looking at some development opportunities down there. And that was probably the best decision in our entire company's history. That was to get on a plane, go down there, see what the market was doing, explore some opportunities. We said, yeah, we're going to set up shop down here and we're going to get aggressive.
Interesting. Wow, that's such a creative way to approach an already strong and well-established market in Brooklyn. I'm wondering how this new reality that we're living in now in spring of 2020 may impact commercial real estate development moving forward. But I think in order to do that, we need to understand how the development process has looked historically for you guys. So I'm wondering if you can talk me through the steps of developing a property sort of on a high level, like generally speaking? Where does the process start?
Well, you're sourcing a deal is probably one of the hardest parts of all of this, because it really comes down to having an incredible network. These are not listed properties that are, on the MLS that, everybody and their brother know about. We're very fortunate in our history that we've developed just some unbelievable relationships, people that really get the inside track to potential development sites, and basically open the door for us to start negotiating with property owners directly, to see if they'd be interested in selling. And so that's something that we've, over many, many years, we've been able to develop those relationships. That's where it typically starts. So that part of the process really doesn't change. But then from beyond there, that's when you start getting into the analytic aspect of the deal. And this is really one of the things that I specialize in more than anything, is really the deal analysis aspect of a development project. We start, working with our architects to come up with different development plans. The development plans then are fed through a series of financial modelings that we do. And then it's kind of a back and forth approach, working with our design teams to come up with a plan that we think translates into economic strength. And then we design a project plan around that, and how we can go through all of the phases of the project, from acquisition through entitlements, through construction and sell or lease out, depending on the product, and then to the ultimate closing of the project. That is the general approach that we take in terms of working up new deal opportunities.
Okay, so if that's the normal process for sourcing, assessing, planning, and executing on a development, how does that process change? Like, in this new reality that we're facing, how do things look from where you stand?
I'd say right now, the market's going to be very slow in terms of new transactions, simply because I think more than anything, capital markets are a little bit in flux right now, and everybody just kind of wants to see some normalcy. Banks, lenders, private lenders are going to be a little reluctant to pull the trigger on any new deal. So I think in the immediate future, you're going to just see very few transactions taking place, and then eventually we come out of this. And so the only thing that I think this really affects are projects that are currently in process, is that it just stretches out your timeline. And while that stinks, it's really not the end of the world. And again, having been through a similar circumstance like this as a developer, I know that the beauty with real estate and development is that you have time. You don't have to feel pressure immediately to have to do something, especially in circumstances like this, when you literally, in some cases, you can't do anything.
Sure. I imagine there also must be some supply chain constraints with just the actual sort of sourcing of materials and labor during this process. Are you guys experiencing that? Or can you speak to maybe how we might be able to deal with that moving forward?
Well, again, we are extremely fortunate on a number of different levels. And the first being that South Florida, which has now become our largest market, we do not have any forced job site closures right now. All of our projects are still moving forward and we're actually making some really, really great progress right now, which is great news. Simultaneously, Philadelphia and New York, our job sites are completely shut down. So we've had to, close up those job sites, secure them. And, the only thing we can really focus on in terms of those projects is just on the back end, just making sure that we're planning and organizing and being ready to get back out there and get back to work. But down in Florida, as of right now, we have not actually experienced a shortage of labor, and we have not experienced any material deliveries or shortages of materials just yet. And now part of that is because of where our projects are in the life cycle. And, this is where, I think we're fortunate right now that products that we do import, for instance, cabinets we import from Germany, and tile we import from Italy. Those orders are far enough out into the future where we don't have to place them now. They're month lead times. By the time we have to place those orders, it's really not impacting anything, our ability to do anything right now. And all of our talks with the suppliers in these various countries have already, given us very, very positive messages that they don't believe our deliveries and the orders that we're going to need are going to be impacted. Of course, just like anything, that can change, but for us, that's really, really positive news. And if we can come out of this with our Florida projects, not really skipping a beat in terms of being able to execute on the construction side, I think that's going to be, that's going to be a really positive thing.
So speaking of your projects in South Florida, I want to talk with you a bit about a project that you guys are the sponsor on. This is a development Equity Multiple investors had an opportunity to invest in. It's a luxury townhome development in Delray Beach, Florida. Currently, as of this recording, in the construction phase. This was a preferred equity investment for our investors. Can you talk a little bit about how you landed on using a capital solutions service like Equity Multiple?
Sure. The way that we hooked up with Equity Multiple is maybe I should explain a little bit about the scale of the projects that we do and what we get involved in. Our projects will range from anywhere from $5 million in total project cost all the way up to $100+ million in total project cost. And because we have such a wide range of projects from a total dollar amount, and not to mention also, different asset classes, because we do single family, we do townhomes, we do multifamily, we do condos. So because the breadth of our platform is just so wide, it's always been important for us to have a number of different capital sources that align with different projects based on, scale from a dollar standpoint, and also from an appetite of what that particular source, what type of deal they want to be involved in. The funny thing is that, from our experience, when you're going after larger checks, in particular when it comes to preferred or common equity, it's just a lot easier for us to get our hands on larger checks when we're talking about $10 million plus, as opposed to smaller deals that are really less than $10 million. And when we're talking about trying to raise $1 million or $2 million or $3 million, there's really not much of a market that developers like us can go out to that can write those types of checks for development projects. It just really doesn't exist. And so you either have to have private investor relationships that can do that. You can try and syndicate it from a lot of different investors, which is a lot of work, but that's not what we specialize in. And just to kind of give it as an example too, from a sponsor standpoint, I want to just compare a $50 million deal versus the deal that we did with Equity Multiple, which was a $16 million deal. Well, on a $50 million deal, if we needed to put in 30% equity into that deal, that's $12.5 million of total equity that you need for that deal. Now, the way that we can structure a development project like that, we can do a joint venture promoted structure, which basically breaks that equity into pieces. And so if we need to raise a total of $12.5 million, me as a sponsor, the way that we structure deals, in most cases, we're going to wind up only putting in 10% of that total equity requirement, or $1.25 million, and we can raise the rest from a source. And again, because it's more than $10 million, there's just a lot of sources out there that we can go to and present this deal to. Now, on the Casarina project was a $16 million total project cost, and the equity needs for this project was approximately $4 million. Well, there's no one you can go to and really ask for a $4 million check. Let me just say that they're not easily findable, those types of sources that want to be writing the $3 million, the $2 million, $3 million checks. They just don't exist. If we wanted to do this project and we had no source available to us to kind of partner up with us and get involved, that would have required $4 million of total equity, which would have been a lot for us. Meanwhile, the $50 million job that we have tons of sources we can go out to and needs $12.5 million of equity, well, I only need to put in $1.25 million of equity. So it's actually easier for me to do bigger projects than it is to do some of these smaller projects. But these smaller projects, they can be extremely, extremely valuable. And we're a very selective firm. We only pick and choose projects that we know are going to be great successes. And so Casarina, 1009 Casarina, this townhome project was a project we were super excited about. It was a smaller check amount that we were looking to raise. And ultimately, Equity Multiple just provides the perfect platform for us to go to for these smaller or mid-sized type deals where the rest of the market is just completely ignoring them. It was honestly the perfect match for us.
Wow. It's amazing how there's sort of an inverse relationship to what you would expect with the size of a deal as far as where you guys are able to source your capital.
I know it's so funny because there is a lot of money. There's a lot of capital out in the market that needs to be put out. But these big institutional investors, they have to ignore these smaller deals. They just don't look at them. And then meanwhile, nobody's paying attention to them, and they can be extremely, extremely lucrative. And I think that Equity Multiple saw that opportunity, and there are so many of these smaller and mid-sized developers that have so much to offer with these types of deals. And it's just an untapped resource. It's just an untapped opportunity, and Equity Multiple is just doing a really great job of taking advantage of it. So yeah, trust me, it was a pleasant surprise for me too to find you guys because in the past these were harder deals. Like, we would be limited in terms of how many of these smaller deals we could really do, just because our capital can only be stretched so far.
Right. The fact that this provides that opportunity for you guys, and at the same time, our mission is to provide access to alternative assets that have traditionally been difficult for individual investors to access. But you're highlighting that Equity Multiple is sort of a unique bridge between the historically difficult to access investments and the historically difficult to access investors. We've only got a little bit of time left before I let you go, but I wonder, there's still many unknowns in this new reality that we're all facing. But I'm wondering what your perspective is on how opportunities might emerge from this situation. Like, particularly having survived the Great Recession, albeit a different type of crisis, but having gone through a serious market down cycle, I'm wondering if you have a sense of where you'll be able to look as a developer, and maybe where the industry will be able to look for opportunities coming out of this. I guess I'm asking, is there a silver lining here? Like, is there some way that we can look at this and think, okay, here's how we look to the future, in the midst of the difficult time that we're having right now?
Yeah, I mean, it's a great question. And I would say that this go round in dealing with a recession type environment and just, total crazy situation, there's a lot less panic. In fact, there is no panic on our end. We're just keeping our eyes open and looking for these opportunities, because I think there's no doubt in my mind that they will arise. And, I think it starts just on a simple basis where we've had such a great ride, but, part of the downside as a developer, some of the things that we were impacted with more recently, the last couple of years, was that development sites sellers were starting to get unrealistic expectations of what their development site were really worth. And that really slowed down, in a lot of markets, the ability to find new deals. And so I think that, the important thing is, when you're seeing markets like that, where you see acquisition costs just going up so substantially, and it's killing your numbers, and as good, smart, intelligent decision makers, you can't just keep pushing the top line to make deals work. That's not what we do, right? We know that the markets just can't go up forever. We all learned that in 2008, 2009. So you have to make good, educated decisions about the development projects that you're going to get involved in. And so I think, from a simple standpoint, I think that there's going to be some people that are going to get hurt. And I also think that it's also going to, whether they get hurt or not, I feel like the owners of certain acquisition sites are also going to get a dose of reality and realize that, the market really was not where they thought it was in terms of what development site was worth. And I think that deals that maybe we've looked on in the past and simply had to pass over, they might come back into light. And so, at a minimum right now, what we're doing is we're actually just spending a lot of time circling back at previous opportunities that we did some due diligence on, and we circled around and tried to make deals work, and we couldn't put them together because the numbers were just not coming together. And we're absolutely going to circle back on those and see if now is or not now, but at some point, if we can circle back and now make a deal work, where in the past maybe we just couldn't because of some aggressive sellers. And then two, I think that, and this is more reflecting into our the type of product that is going to be more in demand in the future and what people are going to want coming out of this. I really think there's going to be some really, really cool innovation within our industry in terms of the type of product that we put out there. I mean, you got all these people that are working from home. You're seeing these, horrific things in front of grocery stores with lines coming out of grocery stores. You see, all of these weird elements that happen during a pandemic shutdown, I think ultimately can translate into some really cool hybrid products that might become very prevalent in the future, where you have, these buildings where people can really live and work within the same community and not have to really venture out too far. And those communities are set up in a way that can really support and encourage social distancing. I mean, I can really see this as, something that comes out of this in the future. And then at the same time, the reason I mentioned the grocery stores is because there's already been this really big boom of urban farming that you've just seen over the last couple of years, and to be able to grow fresh produce in urban settings. And I think that also is a really, really interesting phenomena and thing that I think you're going to see a lot of developers also integrate into more projects, because you basically can create this community that is really, really, really self-sufficient, and you can do everything that you need to right from one location. And I don't know, to me, I think there's a lot of thinking that has to go into it, but I can just see the industry really opening up and creating some of these types of hybrid products that kind of address all of these things that COVID-19 kind of exposed, that we were not building for the world that we lived in prior to March and April of 2020.
Sure. Wow. Yeah, that's really interesting. It'll be fascinating to see how we move forward through this time. Dustin, thank you so much for this conversation. I've learned a lot. It's really interesting to hear the story behind US Construction. Thanks for being here.
No, thank you so much. I really appreciate your time. It was awesome, and look forward to doing more deals with you guys.
Thanks again to Dustin for being my guest on this inaugural episode, and thanks to you for listening. Don't forget to subscribe to this show in your podcast app of choice for more information and to see the offerings currently available on the Equity Multiple platform. We've got links in the show notes. For Equity Multiple, I'm David Lofgren. See you next time.